You've got to understand what credit is. Everything works on credit. We don't do anything with money. I mean, by money, I mean gold or silver. You don't go and buy things with gold and silver. You hoard it. And in times of trouble, you hold more of it. We're comparing a fiat currency, which is getting into credit difficulties, with real, legal, no counterparty risk money, which is gold. Mm. So, this is a crisis which is playing into higher gold prices measured in dollars, I'm afraid.
After months of relatively quiet activity, hedge funds have jumped back into the gold market. Last week, as speculative interest rose, gold prices hit a new all-time high above $2,480 an ounce. However, since last week's highs, the market has seen solid selling pressure. Alasdair Macleod, head of research at GoldMoney, explains that the rise in gold prices is primarily due to the dollar's decline, rather than an actual increase in the value of gold itself. He attributes this trend to government policies that sustain large budget deficits. A potential second term for Trump would likely continue to weaken the dollar. Meanwhile, Chinese households are increasingly turning to physical gold as an alternative to stocks and property, driving up demand and potentially draining physical liquidity from Western markets. The world's second-largest economy is steadily unloading billions of dollars in U.S. treasuries. New data from the U.S. Treasury Department shows China pared its treasury holdings from $816.3 billion in December of last year to $767.4 billion in March. China's official gold reserves rose 18 months in a row. China's official gold holdings now stand at 2,264 tons, accounting for 4.9% of total foreign exchange reserves, the highest ever. So far, in 2024, China has accumulated 29 tons of gold. During the past 18 months, holdings have increased by 316 tons, or 16%. Additionally, through the first 5 months of 2024, gold imports into India increased by 26% year-on-year, with 230 tons of gold flowing into the country. This is despite record-high prices. The Indian central bank added 37 tons of gold to its reserves through the first half of the year. Macleod emphasizes that the rising gold and silver prices reflect the decline of fiat currencies. He points out that gold and silver are legal money in common law, while fiat currencies are merely credit. Macleod concludes that we are witnessing the first stage of a macro trend, where foreigners gradually move out of credit and into real legal common law money, which is gold. Before we explore further, be sure to subscribe and click the bell to stay tuned for more engaging content.
As we speak, gold is nudging into new high ground. I mean, it's around about $2,470.
And we're recording this, for me, the morning of July 7th.
Yeah, absolutely. And this is no surprise to me, really. I mean, I've been forecasting this. I don't forecast prices, but I forecast moves. And it's really very, very simple. It's not so much gold going up as fiat currencies going down, including the dollar. I mean, how long it will take for the dollar to disappear completely is... we will only know in time. But that is the general direction of its trend. So unless we get a change in government policy, which by which I basically mean a very radical change and maintaining budget deficits in a sustainable way, then this is a trend which is going to continue. And I just don't see that. And particularly with President Trump appearing increasingly to be a shoe-in for the next president. Mm-hmm. I mean, he is an inflationist. I think it's as simple as that. So that's going to continue for the dollar. It's going to continue around Europe, and everybody's in a debt trap. I mean, when you've got 130% debt to GDP, which is the current situation for the US government, then there is no escape, particularly with higher interest rates. And I suppose the course of interest rates is something we'll probably cover in this podcast. Mm-hmm. So that I think is really the big macro picture. It's fiat currencies going down, being reflected in a rising gold price and also silver price, mm-hmm. because silver does have the characteristics of money. The important point to bear in mind is that gold and silver, but for practical purposes, gold is legal money in common law. and all the rest is credit, including fiat currencies. So if you want to escape from a collapsing mountain of credit, which is basically a collapsing mountain of debt, because that's the other side of credit, then you can understand why people like the People's Bank of China are motivated to get into physical gold. So you can see that there's a beginning of a stampede going into physical bullion, even after something like 27,000 tons of gold has already been acquired by the public in China. The gold price is rising and rising and rising. The interesting thing is that the People's Bank of China has been selling dollars to buy gold. Now, I put it that way round because it is official policy to reduce dollar reserves, not only in China, but throughout BRICS. So that's in accordance with that policy. But the important thing to understand is that China is selling dollars. That's actually what she's doing. But so what do you sell dollars for? Euros? No, certainly not. Sterling? No. Yen? No. So what you do, you go and buy real money with it. And that's basically what's happening. So we are seeing the first stage of a real macro trend whereby foreigners gradually move out of credit and go into real, legal, common law money without counterparty risk, which is gold.
BRICS, comprising Brazil, Russia, India, China, and South Africa, is an organization that was formed in 2009 to assist each other. This actually came into being right after the economic crisis of 2008. Today, BRICS has expanded its horizons. It has added 6 new members, which are considered significant in their regions. These countries are Iran, the Kingdom of Saudi Arabia, Ethiopia, Egypt, the United Arab Emirates, and Argentina. All these countries are imperative because of the enrichment of natural resources and geographical locations. As of Q1 2024, the combined central bank gold holdings of the original BRICS nations, plus the 5 new additions, accounted for nearly 17% of all the gold held in the world's central banks. Russia, India, and China rank in the top 10 for central bank gold holdings. Macleod said that it is, however, expected to be on the agenda for the BRICS meeting in Anna this October. There is an early proposal for this trade settlement currency, suggesting it be 40% backed by gold with the remainder in other currencies. Now, let's delve into the video.
The history of this essentially starts with the Russians looking at how to construct a new trade settlement currency for BRICS. Originally, it was Sergei Glaziev who was appointed by Putin to look at this problem for the Eurasian Economic Union, which basically were the stans, if you like, ex-Soviet Union stans, if you like, between Russia and China and, North Tibet. Glaziev actually wrote a paper for a Moscow business magazine called Vodomosti. This was about nearly 2 years ago now, where he made a very, very strong case for putting the ruble back onto a gold standard. So we can see which way his thinking is going. And last year, ahead of the BRICS summit in Johannesburg, there were very, very strong rumors put out via RT, the Russian television service, and also by the Russian embassy in Kenya, of all places, that they were going to put this new gold-backed currency on the agenda for the BRICS meeting in Johannesburg. Mm-hmm. It didn't actually make the cut, and it didn't make the cut, I think, because China didn't want it at that stage, because China could see it would destabilize everything. In the West, that is. And furthermore, India didn't want it. So you're talking about the 2 most populous nations, if you like, in the BRICS system. So that was put to one side. It is, however, the indications are that it will go on the agenda for the BRICS meeting in Astana that's in October. And we have seen there's a paper which is a sort of early proposal of how this might be constructed. And they're talking about this trade settlement currency consisting of 40% backing by gold. And the paper actually was not all that well put together. There were big areas of confusion, in my view. There were lots of questions raised in the whole thing. Now, it may well have been tidied up somewhat and some of these issues addressed, but it looks like we are going to see another attempt to get this on the agenda by Russia. And bear in mind that Russia has the chairmanship of BRICS in 2024, this year, and is organizing something like 200 meetings to do with BRICS. These being meetings which are sort of progressing various elements of BRICS and so on and so forth. And there is no doubt that the membership of BRICS will be expanded even further. So I think from 10, we're probably going up to, I don't know. I mean, we could easily see it somewhere between 15 and 20. So that's, that I think is the extent of it so far. Your question basically being the move towards gold backing of currencies. I think there will come a point when the collapse of the dollar and Western currencies, because the dollar goes down, the rest of us will go down with it. There will come a point where both Russia and China will move from trying not to, if you like, change the world in currency terms, to protecting themselves from what's actually going on in the West. And the only way in which they can do that is to put their currencies on on a proper gold exchange standard.
In a world of fiat money and extensive financial regulations, this implies trust in government. That is clearly where the BRICS issues begin. Gold has experienced a resurgence so far this year. JP Morgan recently predicted the metal to average a $2,500 price in Q4 2024. With BRICS massively accumulating it this year, it could be a viable alternative if constructed well. Your opinion matters. Drop your thoughts in the comments, hit the like button if you enjoyed this, and subscribe to stay informed on our journey together.